All right, guys, we've had a ton of questions lately about this current market and the conditions that we're dealing with. If you're a new trader, getting into a market of this state is kind of difficult. Doesn't mean to say there isn't long opportunities. In this video, we're going to tell you that just because we're in a bear market doesn't mean there aren't long opportunities, whether it's intraday, guys, or on a swing basis, 2-3 days, even a week long. Some of the better opportunities, in fact, from a volatility standpoint in a bear market can be on the long side.
Yeah, I think that's one thing to look at. I think obviously, you know, one of the things that you think about for long opportunities in a bear market, sometimes you just want to think about how a stock reacts to bad news, right? And for a lot of times, no one's going to be able to pick bottoms. I think we all understand that you know, sort of gambling and saying, oh, this is the bottom, I'm just going to buy in because this is a level on a chart, or it's a 10% or 50% or whatever percentage retracement. That's asking a lot. So a lot of what I'd be looking to see for individual names that might give you an idea is what is the reaction to bad news. And just in particular, I want to sort of highlight like the poster child for that might be Target. I guess there's a few other ones in the last little bit, but Target. You know, you had just retail wreck on earnings. You then had them reiterate some issues with their inventories. And if you really think about, you know, what has happened at some of the lows for Target, like when things have been doom and gloom, I'm talking more on the short-term intraday trade, and maybe we'll get to it potentially breaking out in a second. But on the short-term trade, what I've found is if an overall ridiculously beaten up name has a monster gap down and it's just all pre-market, all you're hearing about is how bad things look and how horrible the bottom is, just watch out for one thing. If it makes a significant low, and I'll zoom back out so that you can see on the 15-minute, and by significant low, I mean take out its recent bottom, this 145.50. And I remember this because I said this to myself, and I might have even tweeted it. If it takes out a 145 bottom, holds the low in the pre-market, and never reclaims that level. Right? At the open, was there anybody selling it into that previous low, 145.50? Nope. Did it break that bottom at 143? Nope. Sometimes that means it is just a long. Now, it's only been a long for a couple of days here, and I know it hasn't broken back out of this channel, but so far, even in a down market like today, it hasn't really broken these lows, and that's the reaction I want to look for. And so when you have these beaten up names, just look to see if there's follow through. If everything is doom and gloom and everyone thinks it's just got to continue heading down, a little tiny sign like that even in the midst of all that panic selling in the pre-market, it couldn't make a fresh low, and then it held the higher low at the open. Well, the next step is a breakout. I mean, if it's not going to go down, when it puts a gap like that, it's not going sideways all day. You know, stocks don't gap down 10, 12, 15% and go sideways all day. They just don't do that. So, you know, you got to think about what the other direction might be. And sometimes that can be a good way to find yourself some short-term longs. And then if it breaks back out if it were to break this channel on a day where the market is red, I think you can definitely be confident getting into it. But just look at how something reacts when it's a doom and gloom type of day. Are there buyers at the open? Sometimes it's as simple as that.
Yeah, great suggestions there on beat down names and a name like Target. I mean, I really like that name as well. I'm going to give you one more idea that just worked just now and gave you a crazy return on something that you didn't even really have to do, and that was watching splits, right? I mean, we just had Amazon split. I have the chart up right here, so let's call that up. Amazon we knew was splitting right here on this day. So when you look at a chart, you come up June 6th, right, is when it came out as the split day, and it goes all the way up here to the 50 period. But look where we started. Just a week before, we were down here at 103. On the split day, you went all the way up to 128. That is a 25% move in 1 week before the split. Okay, all right, Shawn, you know what? That's Amazon, right? So, okay, maybe that's over with. Is there another split coming? Well, hey, let's answer our own question. What about Google? So Google is there another split coming? I believe there is. So let's talk about Google right now. You want an opportunity to happen before this split right now. The date of record is July 1st. Who cares about that? Let's talk about it the week heading into it. It's going to be July 15th for the Google split right now. So Google's been an absolute monster, right? It's obviously fallen back down. This is one of the first times started back in February where we actually started to trade below the 50 period, which is this blue blue mark right here. Obviously a nice move back up as well here for Google recently. But when you come into July, I believe we will trade somewhere around, I mean, again, calling a price is a little bit tough. The point of what I'm getting at here is after July 1st, we're going to have the Fed come out tomorrow. It's only June 9th right now. So we're going to have the Fed come out next week, raise the rates a bit. We know they're going to be raised in July. I feel like it's baked in. So what I would do is wait for like July, remember it's July 15th. So I would maybe wait for July 2nd, 3rd, 4th, start nibbling in, even buy some calls here on Google. It happened. I could call up Apple chart. Look at that split. Look at the Tesla split. Look at what NVIDIA did heading into their most recent split, right? I feel like Google has a chance to go. Google's PE is at a 5-year low of just 17 right now. Their cloud business is number 3 behind both Amazon and Microsoft. So their cloud is super strong. And they are the number 1 as far as digital ad revenues right now. So, I mean, I feel like you're not buying low quality names. Amazon, I don't like. I don't like the retail sector. And they still got that bump. Amazon got that bump in the face of Target, like Neal talked about, in the face of Walmart, right? Google is its own standalone company. YouTube could be its own company, the way those numbers are getting pumped out. I like Google. I think in a bear market, you want to buy the best names. Not only is Google the best name, in my opinion, but you also get the catalyst of the split. For me, it's Google. It's early July. Start buying now if you want. You still got a month of volatility, so that's the only risk there. But if you're looking for a bear market idea, try Google before the split for all those reasons. Their PE, the cloud business, their ecosystem, the advertising. Google is the name you want to own.
I love it. A couple of great ideas on the long side. It's been a negative market since January 1st. Pretty amazing to think that we're coming up on July, guys. It's been 6 months of nothing but selling, it feels like, anyways, in the overall market. Not the case, though. Some of the best opportunities in a bear market on a volatility basis can be on the long side.